Let me ask you first of all about the story that's in the news this morning, and that is Venezuela. We have seen a significant decline in output from Venezuela, but nevertheless we are still now having to conjure with the prospect of US sanctions. Are you factoring US sanctions into your thinking when it comes to Venezuelan output?
I think when we look at the oil markets today, the fundamentals, we have oil demand growth robust, 1.4 million barrels per day. And on the other hand, it seems that the parties to Vienna agreement, OPEC countries and Russia, are doing well in terms of compliance. There is already tightening in the market. And on top of that, we have the issue of Venezuela. For me, it is one of the biggest risks when we look at the next few months in the oil markets. Please remember, when Mr. Chavez took office, Venezuela was producing about 3 million barrels per day, and today it is barely 1.4 million barrels per day. And when we look at the next months to come, we may well see a free fall of oil production from Venezuela, both in terms of the amount of oil and the quality of Venezuelan oil may well mean that it is one of the major risks for the oil markets in the next months to come. Plus, the developments around Iran are major uncertainties when it comes to oil markets in the next weeks or months to come.
Sorry, just to dwell on the issue of Venezuela for a moment, Fatih Birol. Are you anticipating that this is because of the possibility? Are you anticipating that we will see that free fall that you talk about because of US sanctions being imposed, or simply because of the trajectory that Venezuela is on at the moment?
No, it is a trajectory. When we look at the oil industry today, it is at the verge of collapse. We discuss, we are in touch with many service companies, oil companies, and what we see is that there is almost no activity, real activity on the fields. And as we well know, Venezuelan fields are seeing a significant natural decline in any case. And if there is no money, no investments injected in the fields, the decline will be sharper. Therefore, this trajectory is as a result of all the developments we have been seeing in the last few months and even years.
So sanctions would make that even worse. Sanctions from the United States would only accelerate that decline that you're talking about.
It will depend on when and how these sanctions will be issued, but the trend, the trajectory is in any ways in a very worrisome trajectory.
If you were to see this free fall taking place, how would that be compensated for by other oil producers? Or would it be possible that you, the IEA, would be looking to sort of put out strategic reserves? You'd be talking about the release of strategic reserves and that being necessary.
I have been reading in the papers and also discussing with key oil ministers from the major oil producing countries that they have ensured the markets, the players, that they will make up the loss from Venezuela or elsewhere.
Has the IEA got its arms around the impact that the Iranian sanctions story is going to have as well? What will that mean in terms of supply into the market?
I mentioned Venezuela as a major risk for the oil markets for the next weeks or months to come. And I was saying that I expect that the major oil producers do contribute to the solution of this looming problem in the markets. This is number one. Number two, as International Energy Agency, as an energy security organization, we are following the developments in the oil markets very closely, and we are ready to act when and if it is at all necessary. When it comes to Iran, this is an important oil-producing country, the fifth largest exporter of oil globally. And after the U.S. administration's decision, as we all know, there is 180 days of adopting the policies and taking the position of the countries and companies. We will see how it will develop in the next months to come, and what kind of position the countries and companies will take in this regard. But once again, we are following the developments very, very closely as International Energy Agency. And these are the days, dear colleagues, that the oil and geopolitics are coming far too close to each other. As the head of the IEA, I would like to see that oil remains as a business, but we see that geopolitics is back.
It certainly is. It's certainly being priced into the market. You talked last week in your update about the fact that we are seeing demand destruction. Can you give us some more detail on what that demand destruction looks like? If we stay at $80 a barrel on Brent, is that story going to get worse? If we start to move higher than $80 a barrel, can you put a bit of flesh on the bones when it comes to what kind of demand destruction you are seeing?
Yes. So. Last year and this year, we have been seeing very solid oil demand growth. Just opposite of some people are saying that this is the end of the oil age or whatever. We are seeing just opposite, a strong oil demand growth trend. But with the increasing oil prices, we are seeing the first sign of the slowdown of the oil demand growth, especially in the emerging countries in Asia. These are the countries who are the engines of the global oil demand growth. First, it is expensive, oil, about $80. And second, many of these countries in the last 2 years or so eliminate the subsidies for oil prices, for gasoline, for diesel, for LPG. And as a result of that, higher prices, international oil prices, are reflected to the consumers much more quicker and a much stronger way, which changed the behavior of the oil consumers, and they react to higher prices much faster and much stronger than before. Therefore, continuation of the higher prices may well mean that the global oil demand growth grows slower than we have anticipated previously. There is a risk for the oil producers there as well in terms of slower oil demand growth if the prices remain high and even higher than the current levels.
What does this mean for the shale producers in the United States?
So we already expected the U.S. oil production will grow strongly this year, about 1.2 million barrels per day, which is good news for U.S. and for the global oil markets, especially in these difficult times in the oil markets. With the higher prices, we may well see higher production coming from United States, but given the problems in terms of the transportation of this oil to the export terminals from the fields as a result of the bottlenecks in the pipelines that we have now, I think there is a limitation of the growth of exports from the United States at least 1 or 2 more years. And afterwards, we know that there's a lot of pipelines under construction. And afterwards, there will be much more elastic response to the higher prices from U.S. shale, and we may expect even higher production growth from the United States, and as such comforting the global markets.
Fatih, thank you very much indeed for your patience this morning. It's been great to speak with you. We really appreciate your time. International Energy Agency's Executive Director, Fatih Birol, joining us from Istanbul.